Hi, I'm Emma Everett, team leader for our buyers agency team here at Momentum Wealth, and today I'm joined by our research advisor, Shaun Strickland, to discuss a common question we're receiving recently about investing in mining towns in Western Australia. Thanks for joining me, Shaun.
Thank you, Emma.
Now, there's been a lot of media coverage about spending in the resources industry and its flow-on effects to the WA economy. Today, we'd like to talk about the specific impact that has on the property market. Now, what trends are you seeing at the moment, Shaun?
It's a very interesting market when you're looking at those mining towns. They're a very quick moving market with high highs and low lows. So what we have been seeing recently is with $108 billion worth of investment over in the pipeline for these rural towns up in the northwest, we have seen this bring in a lot more employment opportunities. Employment's actually up about 19%, I believe, within the Karratha region over the last 12 months. So with this extra employment brings the need for extra housing. So what we can see there is from seeing on the ground, we have seen an increase in competition based for both rentals as well as for the capital markets in terms of buying them. The rental market's got a vacancy rate now below 4%. It got up to about 6 to 8% a mere 2 years ago. So we have seen that drop quite drastically. In terms of home opens, more people are attending and more offers are being put in. When people miss out, they're a bit more aggressive on the next one, and that's where we can see some good capital growth.
And so with this increased interest in mining towns and resources towns in WA, what are the main benefits for investors that are looking at this strategy?
So the benefits are mainly twofold when looking at mining towns. So we've got capital growth as well as rental. So when looking at yield, we would like to capture about a 7-8% yield. This is to actually capture that little bit of risk you have with entering a market outside of like your core cities. So in your core cities, a good yield would be about 4 to 5%.
Sure.
So in the rural markets, you'd be looking for more 7 to 8%, which is currently what we're seeing. So being able to get that income come through would be great, because that extra bit of income needs to pay for your increased insurances, the risk that comes in it as well as potentially increased vacancy. And then on the other side, you want an increase in capital growth. So you want some good, fast capital growth, and that's the good benefit of buying in these rural towns. We can see growth rates of 10-15%, which we currently are seeing actually. 3 of the top 10 performing suburbs from REWA within WA are actually all within Karratha, in recording growth rates of 15 to 20%.
Wow.
So that's actually quite huge and quite quick growth. So I guess what we have seen historically in the Karratha region is prices around that sort of $1 million, $1.2 million, and they did drop down to about 300,000 in about 7 years, so from 2011 to 2018. So we are seeing that prices at about $300,000 do offer some good buying and some good upturn in the future.
And I suppose while those prices are low, it's that opportunity to get in while the prices are below replacement value and take advantage of that yield.
That is the absolute kicker. At the moment, to build a property up in Karratha or South Hedland or Port Hedland, you're looking at about $450,000 to build it. Yet you're picking up an established house on land for $300,000. So until prices get up to that $450,000, we're not going to see too much more being built as well. So that's going to constrain your supply, which is obviously a good uptick for capital growth.
Well, it sounds very enticing, but we're really aware that for every reward, there is a risk that goes along with that. So what are some of the risks that investors should consider with this strategy?
Yeah, so the risk really is the fact that they are quite mining dependent. So they are very dependent on the one project. So if that project does, reach to the stage where the setup is complete and they're now actually producing the ore or they're producing the gas, then all of a sudden the employment levels drop. And being such a temporary resident base within these local towns, with 77% within Karratha are rentals, if the job market goes, so do the people. And unfortunately, that is a really big disadvantage of buying in these mining towns. So what you've got to do is you've got to make sure that you have actually timed it quite well. You want to get in the setup phase and you want to get out at the right time as well.
And I suppose in some cases it's not just an industry, but it's an individual company making decisions that can impact that housing market as well. Yeah,
exactly. A really good example of this is Rio Tinto actually, who brought in a camp for their workers. So 600 to 800 person camp. So all of a sudden that's 600 to 800 less houses that are required within the township of Karratha, for example.
Sure.
And that's your demand gone. That's 600 to 800 demand straight out of the market. So that's obviously going to play its effect as well. When looking at that as well, you can see that technology could play a part as well. Right now we know what it takes to set up a mine. However, this is constantly evolving. So what we can potentially see in the future is that this could draw away some employment that's needed within the town.
And of course we do talk to our clients about this a lot, that every strategy needs to be measured not just by its inherent risks and rewards, but also the risks and rewards to the individual investor. So because of the quick movement up and down in this sector, it's worth considering whether you're at the right time in your own investment journey to consider this strategy and whether it's right for you as an individual.
100%. With the extra reward comes a little bit of extra risk.
And so with all this in mind then, what are the key factors that investors should consider when they're embarking on this strategy?
Yep, so I think the very big one is the fact that you need to be all across the projects that are going on. Like I mentioned before, you need to know when the ramp up is, when the slowdown is. You need to be all over those individual projects. Unfortunately, it is a one-horse town in a lot of instances. And one good example would be to actually look at areas which are a little bit more diverse. So looking for areas that have got another form of the reason why people want to live there.
Sure.
You know, is it nearby the coast? Has it got a good local centre? Is there a bit of a build-up? Other royalties for regions was millions upon billions of dollars actually spent building up these rural towns so that people would like to live there and become more of a permanent workforce.
Sure.
So looking at that as well as the projects is vitally important. And then the other side is looking at the ground level, actually focusing on where the market's at on the ground. You know, how many people are coming to home opens? Is it ramping up? Are rents going up? Is vacancy rates dropping? You need to know those indicators. That's what we monitor very heavily actually at Momentum Wealth. We make sure that we're on top of all of these indicators so that we know when to buy, when to get out, because in the end you don't want to be left being one of the last people out of the markets when unfortunately the buyers are gone.
It sounds like a lot of advice is required, not just before the purchase, but also while holding the asset, just to make sure that it's being held for the right amount of time.
Oh, 100%. It's quite a sophisticated investment. So you need to make sure you know when to get in, when to get out, and the best way to do that is to talk to some industry professionals.
Thanks, Shaun.
Thank you, Emma.
I hope you found that information on Perth's mining sector helpful. If you'd like more information about resource spending and other key areas of spending in WA, have a look at our private spending report available for download from the Momentum Wealth website.